The real game in trading isn't about numbers, it's about emotion. A tiny negative feeling, a moment of greed or haste, can shake your entire trading account. If you also want to learn how to become emotionally disciplined like professionals, then watch this video till the end. But one thing, if you haven't seen part 1 yet, please watch that first, because today's content is the next part of it. The link to part 1 will be available in this video's description and pinned comment. So let's start without wasting any time. Chapter 11, Part 1. Do you know that the real test comes when the trading environment is as hot as molten lava? The market is suddenly falling. New trades are forming every second on the brokerage screen, and your mind is caught between fear and greed. In such hysterical moments, the trader who controls themselves becomes the real player in the long game. Everyone thinks that discipline means making rules and following them. But when your heart races, your hands and feet ring in your ears, and the market runs against your plan, those rules suddenly seem meaningless. That's where the real battle of emotional discipline begins. A true trader isn't someone who knows the right entry or exit, but rather someone who can keep their mind cool amidst stress. This coolness doesn't come from magic. It requires repeated preparation, self-awareness, and believing that losing means learning, not defeat, but direction. When the market falls, two types of traders emerge. One who panics and makes mistakes, and the other who remains calm and looks for opportunities. Both are given the same data, but one saves themselves with corrective action, while the other drowns in their emotions. So the question isn't how the market will behave. The question is, how are you training your mind to behave? When the pressure is high, how will your breathing be? Will you still be able to think the same way you planned in a calm environment? This is where the true power of mindfulness and micro breaks comes in. Many successful traders, in such moments, close their eyes for 10 seconds or take a deep breath to ground themselves. They know that this 1-second emotional break can save their millions in trading. Chapter 11, Part 2. When we talk about discipline, it's not just about controlling anger or fear. It also involves intelligently handling excitement. Often, when 1 or 2 trades are continuously successful, we feel like we can do anything, and everything will go in our favor. This overconfidence becomes the beginning of the next big mistake. On the other hand, when there are continuous losses, we start doubting our own system. We think, maybe this formula is wrong, maybe we should try something new. But constantly changing the system is actually the biggest sign of emotional trading. Emotional trading means consistent trading. Consistent trading means that no matter how much turmoil there is outside, your internal process should remain stable. And this doesn't just happen with thought, it requires daily practice. Just like an athlete practices daily on the net. Now the question is how to practice this in trading. The first method is trading journaling. After every trade, don't just write down profit or loss, but also what you were thinking and feeling at that time. This emotional feedback loop will help you understand your biggest weaknesses and strengths. The second method is if-then planning. This means deciding in advance what you will do if the market does something. This way, when that situation actually arises, you react, you don't think. This is the difference between a professional and a novice. And the third method is to create a routine. A routine that isn't just limited to trading, but also includes your sleep, exercise, meditation, and positive inputs. Because a tired mind can never think with discipline. So next time you're in a trade, ask yourself, am I running my system or am I just reacting? If you're reacting, understand that there's still more emotional discipline to learn. Chapter 12, Part 1. Have you ever wondered why people who have spent the most time in the market don't trade every day? The answer is patience and selectivity. This is one of the most powerful forms of emotional discipline, waiting for the right opportunity without greed. Every moment, every news item seems like an opportunity, but experienced traders know that the real earning is in choosing the opportunities, not in chasing every opportunity. These are the people who say, no trade is a trade. Now let's talk about the trap in which 90% of traders fall, overtrading. They keep trading repeatedly because they can't sit idle. They feel like something has to happen right now. But the truth is, pressing the trigger every time creates mental fatigue. And this fatigue makes your decisions slow, weak, and emotional. You need to get into the habit of asking yourself, is this part of the trade plan, or am I just bored? If you have any doubt, not trading is the right decision. Remember, saving money is also a win. Along with this comes another important principle. Less trade, high quality trade. When you reduce the number of trades, your focus increases, your analysis strengthens, and emotional involvement decreases. And this is where professional thinking begins. But this doesn't mean you shouldn't trade out of fear. There's a difference between fear and discipline. Fear keeps you away, while discipline protects you from wrong opportunities. And this is the beginning of that emotional balance, which is the hallmark of a successful trader. Chapter 12, Part 2. Now let's talk about emotional filtering. This means putting every signal not just through charts and data, but also through your own filter. One trader looks at a trade differently from another. Why? Because one is calm, while the other is anxious. One's command is clear, while the other's decision is made out of greed or fear. Whether a trade will be successful or not depends on this. To develop emotional filtering, you need to build a habit. Just as you think before and after giving an answer, a successful trader knows when their mind is saying enough. A good way to do this is time-based breaks. After every 2 hours of trading, take a 15-minute break. Get away from the screen, close your eyes, take deep breaths, and then come back. These small rests save mental energy. Finally, it comes down to self-forgiveness. You made a mistake, a trade went bad. No problem. It's better to learn than to blame yourself. Every mistake is a tool. Identify and accept your discipline. It's not just about making right decisions, but also about recovering from wrong decisions. Chapter 13, Part 1. Every professional trader definitely believes one thing. Suppose you have prepared a great system, and you have also back-tested it. But when the trade goes live, your heart rate increases. You start to feel, will that strategy save you? Probably not. The real battle is not on the screen, but inside the mind. The first step of emotional preparation is the pre-trade routine. Just as a singer rests before a performance, a trader has to prepare themselves mentally. Before trading every day, close your eyes for 5 minutes and visualize that day's strategy. Think about what you will do if the trade goes in your favor, and what you will do if it doesn't. By thinking about both situations, a calmness comes from within. The second step is mental framing. This is determining how you view the trade, as an opportunity or a threat. When you see every trade as an opportunity, your attitude is positive. But if you constantly think about what will happen if there is a loss, then you are trading in a negative frame, which never allows you to make clear decisions. When stress increases too much, the ability to think becomes clouded, and you start making quick decisions, which often prove to be wrong. That's why taking small breaks is very important. Whenever you feel that your mind is tired, or emotions are taking over, get away from the computer. Take deep breaths or walk around a bit. The second method is positive self-talk. Talk positively to yourself, such as, I am calm, I am following my plan, or this is also a trade, winning every time is not necessary. These small phrases make your mind feel secure and reduce anxiety. The third method is visualization of outcomes. Every morning or before a trade, imagine yourself making successful trades. See yourself in that situation where you are working with patience and self-control, accepting losses, and celebrating wins with joy. This mental practice helps you reduce stress in real trading and make better decisions. Chapter 13, Part 2. Emotional discipline means that when you consistently think and act in the same way, your chances of winning increase. Consistency is only built when you can control your emotions. Sometimes the market suddenly goes down or up, which creates fear or greed. If you fall victim to these emotions, your discipline can break. That's why it is very important to make rules and stick to them. This way, your mind remains stable, and you learn from your mistakes to make better decisions. This is the essence of emotional discipline. Continuously improving yourself. Chapter 14, Part 1. Emotional discipline is not just limited to calmness, but it is also deeply connected to your risk management. When you control risk in a systematic way, you avoid unnecessary losses and keep your mind calm. This makes your trading more professional and successful. In risk management, the most important thing is the correct use of stop loss. Often, traders ignore it, which leads to big losses. A disciplined trader always sets a stop loss and does not remove it from their decision. It is necessary to make this rule so that emotions prevent you from making wrong decisions. In addition, you should also maintain the right balance in your portfolio. Investing all your money in one trade is risky. Emotional discipline truly works when you smartly diversify your investments and limit risk. In this way, mental discipline and risk management are complementary to each other. When you understand and apply both, stability will come into your trading, and winning opportunities will increase. Chapter 15, Part 1. Have you ever wondered how the minds of successful traders work? Their biggest weapon is patience. Without patience, you cannot achieve anything in the market. Patience means waiting for the right time, without panicking, without rushing. Patience saves you from wrong decisions. When you make decisions by getting agitated by the ups and downs of the market, the probability of loss increases. Knowing when to step forward and when to stop, this emotion makes you mentally strong. Along with patience, you also have to stick to your trading plan. Sometimes the market tries to lure you, but a trader with a strong mindset does not waver from their trading plan. This keeps your trading steady. In real trading, patience is what brings you long-term success. If you fall into the trap of quick wins, you may have to pay a big price. That's why, work with patience, be patient and wait for the right opportunity. Chapter 15, Part 2. Along with patience, emotional control is also an essential quality. When you are trading, emotions like fear, greed, and hope naturally come into your mind. But if these emotions overpower you, loss is certain. Learning to control emotions in trading is the biggest task. This does not mean that you should not feel emotions, but that you should not let them overpower your decisions. When fear forces you to sell early, or greed tells you to invest more, then loss is certain. A disciplined trader remains calm and focused at all times. They know that the market can turn at any time, so they have to keep themselves prepared. Regular meditation, mental exercises, and getting proper sleep strengthen this emotional control. If you adopt emotional discipline in trading, you will not only reduce your losses but also stabilize your profits. Therefore, learn to keep your mind calm and base your decisions on data and your plan. Chapter 16, Part 1. Do you know that successful traders continuously improve their strategies? Market conditions keep changing, so flexibility is very important along with stability. In trading, not sticking to one thing, but continuously learning is the key to winning. Every trader should analyze their past mistakes and learn from them. It is important to know which decisions were right and which were wrong, so that better decisions can be made next time. Keeping records and analyzing your trades is an important part of this process. It is not enough to just rely on your tools and techniques. You also have to strengthen your mental game. Keep updating your way of thinking, challenge old beliefs, and adopt new perspectives. This is the only way you will be able to remain stable, even amidst the uncertainties of the market. Chapter 16, Part 2. Believing in yourself and having patience is very important in trading. Even when the market is unstable, you should follow your rules. Remember that small losses are ultimately part of the story of big winners. Be careful that emotions can mislead you. Making decisions out of fear or greed often leads to losses. Therefore, learn to manage your trades with emotional discipline. This discipline will keep you in the market for a long time. Regular meditation or mindfulness practices are also very helpful in improving your mindset. This not only increases your concentration, but also makes your decisions calm and logical. Chapter 17, Part 1. Do you know that successful traders know how to accept their losses? Hiding or ignoring losses is the biggest mistake. Accepting losses at the right time helps you move forward. Risk management is not just about minimizing losses, but about controlling losses in the right way. When you define risk in every trade, you avoid unnecessary stress and keep your mind calm. Planning in trading and following it is the key to success. This planning limits your losses and keeps you psychologically safe. A trade without a stop loss makes your emotions take over. Otherwise, it becomes an obstacle to your success. When you are in the market, every decision affects your capital. Therefore, your mind should be calm and focused. For this, it is important that you keep your thinking positive and stay away from negativity. Without mental preparation, no trading strategy can be successful. To make it easy, include techniques like meditation, yoga, or mindfulness in your daily routine. This helps you control your thoughts and make better decisions. Chapter 19, Part 2. Controlling emotions in trading is the most important thing. No matter how much technical knowledge you have, if your emotions control your trading, then loss is certain. Fear, greed, anger, and especially hope are the most dangerous. It is important to understand them and learn to manage them. Remind yourself again and again that winning every day in the market is not necessary. The real win is to limit your losses and trade wisely. For this, follow stop loss and your trading plan. When you follow your rules, controlling emotions becomes easier. Maintaining mental stability, viewing every trade as a new opportunity, and accepting every win as normal. This is true emotional discipline. Chapter 20, Part 1. Do you know that successful traders do not rush their decisions at all? They are calm, patient, and disciplined. Even when the market's ups and downs are fast, they keep their emotions in control and only follow their plan. This means that you too can bring such mental strength and discipline into your trading strategy. For this, it is important to train your mind. Daily meditation, mindfulness exercises, and taking regular breaks are helpful. Taking small breaks during trading reduces your mental stress and helps you make better decisions. When you keep yourself mentally prepared, you can react better in any situation. Chapter 20, Part 2. Learning to manage your emotions is the key to success in trading. When there is a loss in the market, fear and panic often influence our decisions. But successful traders have understood that loss is a normal aspect of trading. They do not consider loss a personal failure, but an opportunity to learn. With this mindset, they avoid making wrong decisions in haste and stick to their trading plan. To develop this discipline, you should note your emotions after every trade in your trading journal. This will help you understand when your emotions are overpowering your decisions and how you can control them. Remember, trading is not just a technical skill, but also depends on your emotional control and mental strength. If you liked this video, please like it. Your feedback means a lot to us. If you think this information can be useful for someone else, then share it, because true knowledge is that which is shared. And if you haven't seen Part 1 yet, the link is given in the description and pinned comment. Go and watch it. Also, turn on the notification bell for all new video updates.